Hey guys, welcome back to another episode. Today I'm bringing another semiconductor video, and this is going to be about one of my favorites, AMD, Advanced Micro Devices. So right now we are kind of being affected with the chip shortage, a lot of semiconductor companies, and I'm going to explain today what are some of these things or some of these hurdles these companies need to overtake. Advanced Micro Devices is deciding what products they need to focus on first. And I'm going to share my thoughts on how this hurts the rest of the business, or is it a beneficial thing for the rest of the business. So let's get started. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button. And for those not familiar, my name is Najarro. I am a long-term investor, and I pretty much hit the semiconductor industry. This is a market I know from both education background and career background. So AMD, as I am talking about this stock pre-market, the stock is sitting at $105. We can see from its 52-week high closing, the stock is down about 11%. Right now it has a market cap of $128 billion. So the thing I was talking about is their CFO recently announced that their highest priority is to secure revenue share. So there will be a sequential strategy in terms of products, with server products and mobile processors first, followed by high-end desktop products. And this pretty much says that, hey, AMD right now, we need to make sure right now with the chip shortage that we are planning with the correct products. It seems like right now they are planning for their, for example, their Epic line processors, which are the processors for their data servers. And they're also increasing keeping the production highly prioritized for its mobile processors. I mean, its mobile processors are the ones that are inside laptops. And first, let me explain why I think these are great moves. Right now, the data center, this is a huge opportunity for AMD to kind of grab market share in that market. Right, we have its competitor Intel, who's kind of lagging in some production of chips. So right now, in my opinion, is the best time for AMD to grab as much share as they can. So great move there. Then they're kind of focusing in the mobile processors. I believe that's also a great move because, right, we're kind of still in this hybrid state. The forms of laptops still needed right now. It is increasing. And they want to be there in the front run. When you go to in the front of it, when you go to some form of store and you're looking for a laptop, you want to see it made from an AMD processor, because you need that kind of, I want to say, work and enterprise environments to know about your processors. So if they're using a laptop, they get a laptop that's AMD, and in the future they're looking for another laptop. Now some of these IT firms, now some of these companies, some of these individual users will more likely go to AMD if they have had a great experience prior with that product. With school starting back up, hybrid working starting back up, I believe that is also a great move. Then they said that followed by high-end desktop products. Unfortunately, this means that some of their Ryzen processors and some of their graphics cards are going to be at the bottom end of that list. That doesn't mean they're not going to produce any of those products. Obviously, they're going to produce them, but they're most likely only going to produce them to what their customers need. So they're not going to, hey, if you're a customer that needs graphics cards, we're not going to make them for you. That's not going to be the case. But they are going to prioritize to the other ones first. And again, I see this as both a good and the bad. In the short term, there might be some investors that might be looking at graphics cards market share. And excuse me, I had something in my eye. Graphics card market share. And for the next few quarters, I believe AMD's graphics card market share isn't going to move much or show any growth. Maybe it might even show a bit of a decrease because they're not focusing in that market too much. They're just focusing it to kind of continue to have some form of, I want to see, a PR or its name in the graphics market, but not enough to grab market share. Same, I believe is gonna happen with their Ryzen CPUs. They're gonna have enough products to continue to have their name and show the strength of that product, but not enough to continue to grab more and more market share, which in the short term of things might seem like something, might bring some form of bearish sentiment. At the end of the day, I think this is a great move. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. We can see, right, in forms of revenue in this most recent quarter, this company reported a 65% it was a 99% year-over-year revenue growth in this most recent quarter. First, if we see in the computing and graphics segment, this was up 65% year over year, and it was driven by multiple things. One of the first things is they had higher average selling prices, mainly in the desktop and notebook processors. Like we mentioned, the notebook processors are ones they are going to continue. Another thing that we saw there, enterprise and embedded and semi-customs was up 183% year over year and 19% quarter over quarter, driven by higher EPYC processors revenue. So here we can see, right, the data processors, the server processors, this is what they're wanting to grow. So those are two markets that I believe has shown strong growth in the second quarter, and for that reason they are focusing in these markets the most. If we take a quick look at AMD stock price right now, I do want to say the stock price is probably a bit overextended from its medium-term moving average, not from its short-term moving average. So these for me are levels where I would dollar cost average, not build up a nice position. AMD, full disclosure, is my number 2 or number 3 position at the moment. So I'm happy with my position size. For me to increase AMD, it would have to go sub 90s in my opinion for me to grab a big position just because of my position sizing. So remember, whenever buying a company, it all depends on how much conviction do you have in the company, how much position do you have prior to it, and do you want to enter into the game, or are you already a long-term holder? Finally, I want to take a quick look at valuation metrics here. If we take a look at EV to EBITDA forward ratios, right now it's sitting at 31.73. These are kind of levels seen around May and even January of 2020. So I don't think AMD is overly priced in my opinion. If we take a look at price to sales ratio, yes, the price to sales ratio seems to be high at 7%, but this is a company that is improving their margins. That is a company that's growing at crazy levels, and it is profitable, super positive in cash flow from operations. So for me, a better metric for AMD now is that EV to EBITDA forward ratio, and we can see the valuation does not seem too crazy. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.